And good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Thursday, October the 27th, 2022. It actually was a very difficult trading day until after the close when Apple and Amazon reported. Before that, there was a lot of volatility, but it kind of would slip lower, run higher, slip lower, run higher. And as we saw early in the session, there was a whole bunch of buyers that decided to move in pretty much right off the opening up to that top of the first half hour. And then from there, we did start to decline, but then we basically held sideways and kind of did nothing. Now, what does it all mean? It means, number one, I need to take off that fib. And starting here in the S&P on the hourly chart, I have left up the finishing point for intermediate wave 2. So we have minute 5, minor wave C, and intermediate wave 2. And then we started down on our third wave. Well, I have to tell you, even I was beginning to question, whoa, what's going on? But if you remember from last night, I did mention that right now, because it hasn't really started to slide off the cliff yet, I had to leave open, and I encourage everyone else to leave open the possibility they could just walk back in and decide to take it up and take it up to 3,900, 3,914, up to 3,925. And from here, it wasn't that far of a trip, but got caught up and it failed. And of course, then the earnings and the news just, again, pushed it straight back down to session lows. Now, on the hourly chart, we did come down after hours. So on the earnings reports, smashed through both, or smashed through the 200 period EMA and went down and touched the 200 period SMA. It did bounce off those levels. And as we're getting ready for Globex to start, it looks like it's going to basically almost open unchanged, as Apple is now beginning to move higher off its close at 144.80. So now they've already got it up $1. So it's a very strange way that they're trading it, because while I was preparing for the update, Apple traded down to 140, and now they're running it back up because the conference call is still underway. And that's how people want to interpret what this forward guidance really is, even though what I was reading, they do feel that it'll start to decelerate. In other words, the declines will start to decelerate. The decline in revenue will start to decelerate by the end of the year. So why we're buying it all up now, couldn't tell you. In any case, I think that was pretty bold of Apple to kind of put that out there, because they already did say they did miss, not by a great deal, but they did miss their estimates for sales for iPhone 14 and for the new iPad. Did miss, not by a huge amount, but we're talking like billions, but it was large enough to push the stock lower initially. Now, how it's all really going to pan out, we got to let traders decide what they want to do, and then what the balance of the globe wants to do with all of these earnings reports and this news. So I am going to continue to count what we are going in, or have been doing, as a beginning stages of an intermediate third wave down. Now, I'm just going to drop down to that 15-minute chart so we can take a peek. This, very confusing, not only for me, but I'm sure for a lot of other people, because like, what the heck was it? Now, I want to share with you what I do when we get into a situation like this, and you're like, wow, what is that? I will go down and I'll go over to the styles. I change mine to a line chart. It makes a little bit of a difference. So if I'm going minute 2, I'm now beginning this third wave down. And so I can kind of figure that what this is a sub-minute 1, sub-minute 2, and now we're beginning to play out in the third wave. So back to what I do use, and that's the candles. we can put it in there and we'll get past these moves. So what does that tell us? Well, we still have earnings reports that are coming out, but the big tech companies have kind of actually reported, so they're a little bit done. Now, Intel, of all the companies, which doesn't get the respect that I believe it deserves, for A, for the size of the company, B, that its longevity has proven that it can weather storms. But it did kind of basically blow the doors off. Not totally, but for Intel, blew the doors off. And I'll show you. Earnings, they were estimating that they were going to earn 34 cents. They came in at 59, almost double, leaning more towards double than disappointing. So, well done, Intel. In a time when chips are tough, and I'm not sure if it's going to be doable again, but in any case, Intel surprised the market, and the stock is trading up $1, close to $1.50 on the offer. So what do we got going on? They're now going to buy up this market right now. I'm telling you right now, I'm looking at this going like the NASDAQ is now going to, they're bidding it higher, 11,110, closed at 11,095. So S&P 37.95, closed at 91.50. So we're still going to be up at the top of the range there, 95. NASDAQ, always crazy. Why? Well, they got Apple up a buck off its earnings, and that's good enough for them. Now, Amazon, on the other hand, did not pull out any surprises or punches. They lost. And they're not coming out saying that, well, we're looking like it's going to be really wonderful come, fourth quarter or Christmas or whatever. So we're moving higher on the back of Apple will then, and Intel. But that's going to do enough to pull up Google, because they'll come running for all the rest of these stocks now. Oh, Apple's recovered. We got to go recover everybody else. Does not mean that that's the way it's going to stay. But we're just counting waves right now. So if anything, I'm still looking at, this was the 3, right? A minute third finishing there, which I kind of doubt that it did. But if this gets up too much higher, then that's going to be 3 and this will be a 4, or we'll work it out. Come down to the 5-minute chart. We can take even a closer look at what we got going on. It's just a quick pop off of that low. And how high they want to get up here, whatever reason people are coming in and doing what they're doing, we don't know. I got to leave it to the market. But I do think this is done, and we're now heading lower. And I would not suspect that we're going to come all the way back up, start breaking back above 38. Just keep marching higher on this premise that A, the Fed's going to cut, B, all of our interest, all the interest rates are going to be pivoting. And so we need to start buying. Eventually, they're going to turn. You see how they turn away from, they're buying the dollar. What's been Pavlov's dog? What's been the response? Oh, higher dollar, you sell the stocks. Sell the dollar, buy the stocks. We're seeing the opposite. So how much emphasis do we really need to put on that game that we've seen in play for a month or more now? Again, this is what the market does. So I think that we need to now just work through everybody trying to interpret Apple's earnings and what they're saying going forward, and then actually slip that into reality. If you just want to go trade on Apple earnings alone, that's fine, do so. But the fact remains, Google is lower, Meta is lower, except Meta, they just now popped it up. So we see all of this that the market perceives and believes, oh, look, that's going up. This should go up too. That's a fallacy, I'm telling you, but we need to be able to trade it because it will relate to a higher tick or a lower tick in the index. And if you trade the index, you're basically trading 500 companies and what they do and what traders do every single day in those. What can we expect here in the S&P? I would definitely be looking for continued downside. What's now going to kick it into gear? Couldn't tell you. There's so many different things that are out there. But however, tomorrow we do have, and let me just get over there real quick and tell you what we've got coming out tomorrow. Personal income and outlays, that's red. The rest are basically green, which is they're not necessarily market movers. Employment costs, consumer sentiment, pending home sales. Those all employment cost indexes at 8:30 Eastern, consumer sentiment and pending home sales is at 10 a.m. Eastern. What may have a play here is personal income and outlays, and that comes out at 8:30 Eastern. Now, what else we got going on tomorrow? It's an expiration, and what a doozy it's now promising to be. If you happen to have a position in Metaverse, and let's say that you decided to short some out of the money puts that jumped in the money, and then some of those puts went deep in the money based on the reaction and the drop in the stock again today. So it got pretty serious. And a lot's going to happen between now and tomorrow. And it's going to really have an effect on the expiration. The volatility is going to remain high. Volatility is going to be high in Apple. Much will depend on how the rest of the globe wants to interpret the Apple earnings. Do they really want to push? Right now, stock's only up 70 cents. So you can see how that finishes up and they start to walk it back down. These are how things happen. Same thing when the earnings first came out. Yesterday in Metaverse, somebody pushed that button and traded 142. Right before, it traded down below 100. So crazy things happen right around the earnings time. I would look for continued downside. Again, we're on a 5-minute chart. Let's see if we can start to put some Fibonacci retracements and extensions around what we're doing here. Again, first one I can try to throw up is, yep, we're going to put extensions on for this small wave 3. Well, you can see just by that, we've actually already went down, right? Pretty far. If I move it over there, it's still going to look the same. So this third wave, although it's minute, has already surpassed, come back up above 1.618. So there is a strong possibility that I'll put a minute 3 here, and this is a minute 4. We come swinging back down again. So, and then once we're done with this minute, this is 3, this could be 4, we're done with the 5th, I'll redraw the areas of where that would likely come into play. And we can take this one off because I am actually going to go ahead and stick that 3 right there, because now it makes total sense to do it. I'd left it open before. Again, this is minute. So what we're really building up towards is that minor first wave, right? We are in an intermediate third wave down. What's going to be inside of that? 5 waves of minor degree. And the first wave of minor degree, what's going to be in that? 5 waves of minute degree. So we got a lot of work to do, or the market does. But we've got a long way to go before any of this is done. Now, what do we want to think what this little 4th wave could do? Again, going right back, I'm going to flip over, go to the retracements. Remember, 2 types of Fibonacci numbers. If I'm looking for just a retracement, it's because wave 4 corrects wave 3. So the relationship is there. 4 is related to 3. Wave 2 corrects wave 1. So there's that relationship. The third wave is related to the first wave. The 5th wave is related to the 3rd wave. That's how we're drawing extensions. Retracements, 2 to wave 1, 4 to wave 3. Retracements, 2 to wave 1, 4 to wave 3. Extensions, wave 5 to wave 3, wave 3 to wave 1. So in order to do just retracement, I'm just going to go up to the high of wave 2, which is where wave 3 began, and then the low of wave 3, which I'm going to say is right here at this afternoon's little slide. So, and I did that backwards. So, oh no, I didn't. I'm sorry. My brain isn't functioning. So here we are. So we're actually almost back up to 382 for a fourth wave. That's the most common. But we may just continue to rally, get ourselves up to 38.11, and that would be 50%, and that should be enough, and then we should come back down. Once wave 4 is in, then I can flip back over to extensions. Same deal. Go for where wave 3 started, to the bottom of wave 3 to the completion point of wave 4. That'll give us the extensions for minute wave 5. Once minute wave 5 is complete, that will then complete minor wave 1. Then we're going to do back over to retracements. And I'm then going to go from the top where wave 1 started to the bottom of where minor wave 1 completes, so I can get my retracements for minor wave 2. Okay, now I'm not going to take the picture too much further than this right now. If you want to go out to get an idea of how far all of this can go, I'm going to then again go to extensions. And I can take this off so we don't get it all clustered. And I'm going to go for the top where this intermediate wave 1 began, to the bottom, and then up again to the top. And it's 38.70. I can barely see it. Got too much going on in there. Hold on a second. This, I got to bring it down. Couldn't see it. All right, so go out here so I can get, there it is. So we're going to go back up. I'm going to do this entire move to this entire move. And now what are we looking at? Intermediate wave 3. Its relationship on a Fibonacci basis is to intermediate wave 1. So here we go. Intermediate wave 3 will equal intermediate wave 1 at 30.73. Wave 3, notoriously the longest and the strongest out of waves 1, 3, and 5, then would project down to 25.63, 27.58, and 28.78. Those then come into play. And actually, I'd be looking here. So I think that we can get some serious business going on down here. And that's going to surprise a lot of people in the market, because they're still on the boat of Fed's got to pivot. Fed's got to pivot. Look at what they're doing. The Fed's got to pivot, blah, blah, blah. And it'll be interesting as to what actually that will create. If they're just stepping in here, I'm telling you right now, I believe that's just short covering. Pre-earnings or whatever they were doing after the market and then trading it down to 140. They're saying, oh crap, and now they're just taking it back in. I don't know. But that would be my take, and that's just me and my history of trading, of knowing how people trade. So that's where I'm going to leave that for right now with the S&P. Let's go take a look at the NASDAQ, which is probably doing a whole lot better, racing itself back up higher, can't keep it down there. Gotta go, gotta go, gotta go. Apple's going to save the world. Okay, let's just trade with them and not against them. So from where the market closed on negative earnings, but on forward guidance, the interpretation is Apple's fine. They're all going to do great and they have a ton of money. Okay, we'll go with that. That means that Apple, during expiration tomorrow, let's just take a peek. Not that this, it has a lot to do with the index, but we're just looking. Look at the size of this thing. What are they trading now? They're trading at 147. Well, close at 144. These will be very valuable. All right. Now, what are they going to shoot for? They're going to go back and shoot for this one, 150. Tomorrow. So remember what I said. Tomorrow is expiration. It's a weekly expiration. And I find it very kind of disruptive almost to the market. And here's why. Fun to trade, but disruptive to the market, because now there's enough traders out there, they're going to try to pin it where they want it, according to their positions. And that's how this all comes into play. So, having said that, let's go over and take a look. Same deal here. I've got intermediate wave 2 complete. It was a failure, right? Because it failed to take out that high. But here we have the 5, the C, and the 2. Here's wave 1, minute. Wave 2, minute. I'm going to put that minute 3 here because I did it over in the S&P. And I'm going to call it the same here in the NASDAQ. Now, I think also that when you're trying to do your analysis and you're looking at these things and you're watching the stock, don't read into it to think, how is that all got to play out the next day? It just, we don't know. We have to wait for the next day. For all I know, someone comes in and goes like, you know what, you're all done, you're all covered, and they run it back down to 140. We don't know. So if you're trading it right now, we have nothing to trade it against. We got no options. We have futures, but you just saw this future nosedive. They ran it up to, let's see, how high did you get? 11,189. It's now trading 11,060. 29 points. Bang, take it away. So the volatility, even after hours, is there. So what am I looking for? I am going to take this guy off because that was for a different little move. And this is for the larger intermediate third wave. We actually went sliding through that first support level at 10,965, raced to get it back, racing higher to get more back. Again, attitudes, everything can switch out so quickly. So if I'm looking at this as a third, now what can I do? Well, here's the small 2. Remember, we're going back to retracements. And I can now, I'm going to go down so that we can make this easier on ourselves. Let's go to that 5-minute chart. And we're going to put in, where are our retracements? Because we're going down to the minute level. If this is minute 3, I'm going to go to, this was a strange little one, but I'm going to go over here. Where is it there? Maybe, nope, it's actually over there. So this, let me put him over there. And I'm going to put my retracements like this. This is for the 4th wave. So here's the 3rd wave. Now, what's that 4th wave tell us? They kind of went zipping past it, now back down at it, the 38.2% retracement level at 11,156. Where's the market trading? 57.58. It's going to sit there before it needs to make a next decision. We still have a hooking 20 and a hooking 4 and a hooking 8, or rising 8 and 4, a hooking 20. So they may go on that. But remember, this is a 5-minute chart. And that's just telling you what it's looking like for a 5-minute basis. Your picture can change every 5 minutes based on the fact that it's only a 5-minute chart. So we have a lot of pressure coming up from the 200s, the EMA and the SMA, the 50s, the EMA and the SMA came right up and touched that 50 SMA. 5-minute basis, but still touched it. So they continue to have the same power no matter what time frame you're using. But then again, you have to keep in mind, it's a 1 minute, a 5 minute, or 15 minute, an hourly, a daily, whatever those charts would suggest. One thing that I will show you is on our daily charts today, you see what it did? It smashed through the 20, broke below the 4 and the 8, and closed below them. That's negative. So you've got that going on. These are bounces. The daily gave us the clearer picture that it broke the 20 and closed below it. That sets a negative tone on a daily chart. How that rolls down, yet to be seen. But we did see a very strong follow through, but now they're bouncing it back up. because we reached a level where we can bounce. If we completed a third, we're looking for a fourth, and we'll see how that all pans out. Our moving averages are continuing to suggest we're likely to go back down. Let's see how they want to treat this stock. Right now, they're still just going to have that play back and forth and back and forth. We haven't gotten a hold of any of the other, the Asian markets or the European markets that want to have their say about Apple's earnings. Now, again, tomorrow's expiration, personally coming out late, pre-market. Volatility should remain pretty strong. They didn't pop it as much as I thought that they would, and that's basis on the Dow. The Dow had some decent earnings from Honeywell and Caterpillar, which supported pretty much keeping the Dow higher. And it did actually provide a lot of support for the S&P. The Russell basically tried to hold higher and then did slip towards the end of the day, but now is recovering and basically just barely lower. So less than a buck, and basically you can almost say that that's unchanged. So again, we'll see how all of this plays out. Right now, I'd be looking for completion for this little fourth wave, and then for the market to turn, go down in a fifth, break the lows of that third wave. Then we're going out to our other supports. Again, when we go left, and I got to move it out though a little bit. Let's go back out to that hourly chart. When we drop and we're starting to look, we drop below 10,921, not a whole lot. Got to go back a couple of weeks. 10,718. We have the low at 10,932, but we kind of smacked through it, regained it, but smacked through it. So that's still, it's still support, but we already know we can get through it pretty easily. Next would be on a price basis, 10,713. Then we have that low of intermediate wave 1, and that's at 10,004. Let me get that exact number. I thought it was like 84. 10,484, 85. So yes, right there. Once that starts breaking, we will start to get acceleration, but I suspect we'll get some acceleration prior. Again, we're working through the very beginning stages of intermediate wave 3. That's going to consist of 5 waves of minor degree. We're in minor 1, which will consist of 5 waves of minute degree. Building blocks, remember? So the trend back is in force now down. So we're looking to count 5 down, 3 up, 5 down, 3 up, 5 down, 3 up, all the way. Depending on degree, will depend on how big those corrections up are going to be. All right. I am going to leave it right there. Our next update will be on Sunday, October the 30th.